is David Patrick Fitzstock Charts. Charts while you sleep, week 9. Weekend market analysis. We're in a 39-day uptrend. Things got a little bit choppy this week and certainly on Friday, but the intraday charts were suggesting everything. And we're going to look at multiple time frames because that is so important when you're a trader to understand. You know, I always talk about your risk profile, your trading time horizon. Your trading time horizon is when you're trading. Are you swing trading, day trading? It's so important, if you are, to look at multiple time frames. All right. New money, March. We're in March. New month, new money. Yeah, question mark. Who knows? A lot of people have talked about that statistics when you get new money, early in the year specifically. Who knows? We're not going to fall in love with that statistic or not. What statistic do we like a lot is the Thursday, Friday, week before Globex hitting a pivotal low. So with that said, March 1st is the first Friday in March. So we have this coming week will be Thursday, Friday to possibly hit some pivotal lows. And that's important. We'll talk about that in a minute. 90% club is insane. We'll look at that in a second too. We just did the video, the promo video, because we had 1,000. I think we're at 1,009 already. I mean, we're already working our way to 2,000. As crazy as that sounds. Let's talk about multiple time frames and look at the 90% club and look at that 1980 historical chart pattern comparison. 90% club, 18 triples year to date, 65 different options. January, February, and March. 65 of them that are up over 90% or more. Some 3, 4, 5, 600%. 65 of them. I don't think I know we haven't had 65 trading days. We are over 1.5 options per day that are doubling from our suggested entries. You'll never find that anywhere. And that continues to grow. We're going to try to make this video a lot shorter than some of the other ones that went pretty long. And I know those long ones are tough. I don't really have a ton of new material, which is good. So it's not going to be a lengthy video. But we are going to go over everything like we always do. And I want to talk about the multiple time frame thing. So 1980. So will we diverge? Yes, we will. That's the answer to that question because we always diverge. Go look at HCPC. I think I have it under price patterns on the website now. I think it's under price patterns at the top. They've all diverged, every single one of them. So this will diverge. Is it going to diverge this week? Maybe. Next week? The week after? I don't know. It'll diverge. But if it doesn't, I always talk about 2007, 2008 were my best years trading, betting on the downside because we look like the panic of 1907. That didn't diverge for 18 months. So do I think 1980 is not going to diverge for 18 months? No. The odds are against it. But until it diverges, we're going to be all over it. Okay, so what do we have here? MACD bull cross, right? MACD bull cross. You get up to above the 50 SMA, keep going. Come up here and bull flag. This over here is the left 1980. Bull flag above a rising 10 SMA. Okay, right there is where the 10 SMA crossed back through the 200 SMA. And right here's on the right now is this bull flag above 10, 200 SMA. So MACD is showing a bear cross over here. It didn't bear cross until we got way up here, almost near new highs. So that part of it is diverging. So we're going to have to see, because when that showed a MACD bear cross, what happened? You get knocked out of trend, go a little bit lower, and that's why I said it's very possible that we come down here, get knocked out of trend, and break the 200 SMA to really spook people out before going higher. We already know 2681, is it? 2681 is our line in the sand. That's 100 handles. 100 handles lower. Well, guess what? We got in down here. So we can afford to give back 100 of this huge gains that we've had. I know I draw all over the place here, but so we're going to have time will tell will the pattern diverge. Before we get into the markets, let's talk about multiple time frames. So what do we mean by multiple time frames? Well, I always say trade your own risk profile, your trading time horizon. What does that mean? Obviously, your own risk profile. Some people are look at the market once a day, if that. They're swing traders. They're going to put on a position. Guess what? They're unable to scale. They can't scale with us. We scale 1-2%. Some people can't do that. That's fine. Look at the 90% club. Imagine if you didn't scale. You'd be hitting out of the park all the time, especially since we're batting near 900, 90% win percentage this year. So if you can't scale, you can't scale. You know, you have to, sometimes you have to fine tweak the methodology to meet your risk profile and your trading time horizon. So risk profile, some people are risk takers. They're going to take the FANG stocks. Some people just like trade banks and oils and stocks that are cheap, and like stocks more towards their bottom, maybe trading a WV pattern like we saw in Apple twice in the last 5 years. Actually, we might have seen it 3 times since 2013. So that's fine. That's your risk profile, how much you willing to stomach. You know, some people say on the ESFL, wow, that's too much risk. Or some people come in like Friday and say, wow, if we get long versus Globex lows, that's a lot of risk. You're right. Every day is different. If it's too much risk for you, don't take that trade. There's a zillion trades. We're going to have thousands of trades. You've just seen it. We have 1,000 that have doubled, right? So we're going to have thousands of trades. And if you don't like the trade setup, don't take it. There's going to be times that it does meet your risk profile, and then it does meet your trading time horizon. Trading time horizon, what's that? Well, once again, we just talked about some people check in once a day. Some people are glued to their screen. Some people are trading at night in Globex, ES futures. That's your trading time horizon, right? You're short term or you swing, or you can be hybrid, somewhere in the middle. If you're going to do, all of them, have different accounts. We talked about that already. But anyway, multiple time frames. So let's just look at this real fast. I mentioned, and I haven't mentioned this in a while, that, well, first of all, let's look at the 5 minutes. So this was Thursday. You're seeing Friday over here. Let me see if I can get this up. 28. Yeah, okay, 28. Yeah, okay, so right up in here, I posted on Twitter. Let's see if I can get my drawing tools out. So you saw these new highs up here, first of all. Highs of the day, obviously. We're talking intraday. So highs of the day are coming with a double top in MACD, but they were confirmed. So these new highs in the day were confirmed. So there's no bearish divergence there. We double topped, though. We have MACD double topped. When you see that, I pointed out you're starting to see a MA pattern right here, right? That's the bottom of the A. So you can see the double top. There's your M, the middle of the M, and then there's your A. So you had rules to engage short on the break of the uptrend double top, but then MA pattern. So anywhere in here you'd be short, and obviously you're scaling and maybe putting your stop back at your entry. That's intraday. That's 5 minutes. Every day there's a new pattern, 5 minutes, so don't fall in love with this. And by all means, does that run into the next day where you gap down? Who knows? But a day trade's a day trade. If you want to hold a runner on, put your stop in at your entry, right? But then I posted on Twitter, on the free Twitter account 2004, which I don't very often do. I posted, 60 minutes. I was looking at it, I'm scanning, and after I was like, wow, this is interesting, right? You got a head, left shoulder, right shoulder. So after we saw an MA pattern, you got to remember we're 38 days in an uptrend. So you're starting to search for something that might show clues of a pullback to break us out of a trend to refresh things, right? A lot of times these will work out. And maybe it does work out. Who knows? I mean, this Friday we sold off 20 handles straight. Okay, so with that said, head, left shoulder, right shoulder. This would be more of a hybrid, obviously, between your daily and your 5 minutes. So that person's like, whoa, that's bearish pattern. Well, what would negate that? Obviously, break new highs. We didn't break new highs. But it's no longer really a head and shoulders. Even if it comes down here, it's probably, that's an elongated shoulder. That's a tough pattern. I almost say this is a double top, but then you're looking for an MA top, which could bring you down to 27.30. What's our line in the sand? 26.81. So, yeah, every day we get longer, or every day that this uptrend gets more and more stretched, like someone said on Friday about day trading, that created a lot of risk versus Globex lows. Yeah, guess what? Swing trading, if you don't have any swing long positions on and you're putting on now, yeah, that's super hard because your stop is way down there, all right? But getting back to trading multiple time frames, even when this thing started, your stop was way down here, right? Because we were getting long here. So You had a lot of risk, but it was worth the reward. Let me just give you a little piece of advice. If you have a lot of risk, it's real simple. Just reduce your trading size. Trade 4 contracts, go down to 2. You trade 100 contracts on options, go down to 50, go down to 25. Just reduce your risk that way, because these are good trade setups. All right, so where's the S&P head? We don't know. If we continue on the historical chart pattern comparisons, we know at some point next week we could see what? Price strength confirmation. That would be very weird because we're 39-day uptrend and we're going into a week that's the week before OPEX and we're looking for lower prices. So now we got all sorts. Is your head spinning yet? It shouldn't be, because the bottom line is don't overthink things, right? Stay long versus your stop, and stay long in uptrends until we get knocked out. Could happen Friday afternoon, could happen Monday, could happen Thursday, Friday, this coming week, the week before OPEX, right? So we're not going to predict. I will say this. Friday I came in and I added some UDOW. I didn't get great prices. But the thing is you got to remember, if I'm long spiders from here, I've added a lot of different times and then scaled. This is just another ad. There's an ad right there I added. That was a bull flag. There's an ad right there, right? And I added, I didn't add spiders because I had spiders on for a nice trade, but I added UDOW. So it's just another ad, right? So if you've already scaled these ads in here, which I did, your cost basis is between here and here. Your cost basis is right down there where that 2681 is, right? That's where you want your stop to be anyway. So I don't think you should be shocked to anybody, even though I'm a risk taker, that I added UDOW or exercised spider calls and added that. That should be no shock. That meets my risk profile, and I just upped my stop, just protecting myself. So I'm adding to winning positions. I'm not day trading those. That would be a complete failure if I day traded UDOW. That thing just went nothing but down on Friday since I added. But I did day trade the ES short because that's a day trade. It's a 5-minute rules of engagement. So know the difference. You have to know the difference. Otherwise, you're not going to make money, right? 5-minute rules of engagements for day trading. Swing trading is the ESFL and or any trades you put on swing versus your stop. And I want to address this one other thing is, if you got long here, you had no spiders on, you got long there, where would you be your stop? I would still use 2681. Don't put these tight stops in. You're going to get whipped around. So if that's your stop and that doesn't meet your risk profile, don't take it. Or just take it with smaller size. But don't put these tight stops in that you're going to get whipped around. I'm telling you, I said going into this week, this is going to be whip city. Average traders are going to lose money. This is a tough week. Now, next week is another challenging week. Unless we see price strength confirmation, we're looking for pivotal lows. And then, then we got to go back to that chart and erase all this jazz I did, right? And then say, oh, wow, this MACD bear across did mean something, and we're really not here, we're up here. And if we do that kind of pullback, it's real simple. You're going to go and hit some stops, right? All right, so we're not going to predict. We're going to ride the trend until it stops. It might stop on Friday. It might stop on Monday. It might stop on the Thursday, Friday this coming week. All right, let's fly through it. I didn't want to make this video long. Of course it is again. SPX, a lot of red up here. A lot of selling taking place during the day. MACD bear cross. Still in an uptrend. I'm still, I don't know, maybe even 50-50 that we're going lower before we go higher. Okay? I don't know. I'm not going to be the guy that predicts that. I don't like to. I do know if we do see the price strength confirmation and we close up there above that, that's going to be very bullish. We're going to 2850 and the 2900. But if we don't, and you take out Wednesday's lows of 2775, I think we're going to that 200-day moving average. And I think we could even go, what's this candle's low? 2731. All right. And if, which I don't think, we get down this low, I'm going to be in cash. And you'll be like, why would you go to cash when the rising 50 SMA is going to catch up and that's going to be support? because I have huge, like you hopefully, have huge gains on the year. And I now want to become into a defensive mode because we would be below the 10 SMA. We would be in a downtrend. MACD would be weak. And I don't trade the 50 SMA. I don't even trade the 200 SMA. I trade the 10. All right? So if we get down there and we bounce and we do some V, guess what? If that happens, let me see if I can remove drawings. The 10 SMA is coming back down, and we're going to bull flag above it, and I'll get back in. So have a game plan, have a backup game plan with your stops, and don't become emotional or opinionated. All right? If your opinion is just, your opinion should be, I'm long with uptrends. In downtrends and no trends, I'm preserving gains in year-to-date capital, or year-to-date gains in my trading capital. That's your opinion. All right, let's get into the NASDAQ. What do we got? Well, it's holding the 10 SMA. It's MACD's bearish. We're going into the week before option expiration. Yeah, until we see price strength confirmation, I would say tricky. I don't really have a bias until we see either a break of below Wednesday's lows or a break to 6-month highs. Oil futures, talk about tricky. Wow, they got double topped up here. MACD looks weak. This thing really looked like it was going up here and it's just failing. So right now, that does not look good. XLE broke trend. MACD's weak, very sloppy. There's no momentum. XLF, wow, impressive. You're breaking the 200 SMA. MACD's heading lower. That's a tough trade. And you're going into a gap fill. It's a really tough trade. So far, we haven't found anything that is enticing to be longer, right? And you should already be fully invested. Longer means you get leverage long or trade in your trading account on top of your swing longs. IWM is holding up. The 200 SMA, it's right at MACD bear cross. No momentum, very tough trade right now to do anything new. Now, IYT, it's breaking trend, bear flagging, below the 10 SMA, below the 200 SMA. So that would be a big concern. In fact, I might even put a short setup on that sector to go short because that looks very weak. And that's led before. It could lead on the way down. Now, at the same token, the IBB is the exact opposite. I would mind seeing IYT short, IBB long. I mean, I'm not going to get in those because I'm only fully invested, but the IBB, we already talked about this over and over again. Right back there showed relative strength, led the whole way up. And then it bull flagged here and is grinding higher. And I still think this goes to 120. So we do have something that looks enticing. We have the biotechs. UDA looks interesting. It does need price strength confirmation. MACD bear cross coming, needs to curl up. Price strength confirmation will really solve all the problems with the market's trading sideways right here, because the momentum will curl back up and you start seeing some leaders arise. Gold breaking down, broke that uptrend line, is now in a 3-day downtrend. 50 SMA. MACD is at 3-month lows. Don't pick a bottom there. I don't think it's a great trade. Finally, bonds rolling over. Are they going to come fill this gap? Still would like to see them break the 200 SMA before going back higher. But we're long, what is that, the JP Morgan preferred F, where is that? Right there. I don't want to do technical analysis on a preferred stock, but I'm just saying, you get long at, what are we at, 25 and small change, it's above 26, and we're getting 6 1/8%. It's a nice trade. I mean, I don't really like looking at charts of preferreds, but if you wanted to look at that compared to the TLT, you're not going to see a lot of resemblance, to be honest with you. All right, let's fly through some stocks. Apple. Yeah, talk about tricky. It was a tricky week. We're heading into a tricky week. We just had a tricky week, and Apple's even trickier. There's zero momentum. Sideways. Look at momentum. Sideways. Look at price. Sideways. Double top. I mean, below there. Below here's trouble. All right, what is that? 168.42. Below that's trouble. And above here is good times. And you remember I used to draw these a lot. We haven't seen them in a while because we've been doing nothing but going straight up. This is no man's land inside that X. No man's land. You see that? You'll lose money in that land. Stay away from it. Wait for a break either way. Okay, Amazon. Now this looks interesting. I actually like Amazon. Sandwich between moving averages, MACD bull cross. I think we're come here to fill. So I think 1,700. I think Amazon will be on the ESFL this coming week, assuming we close green. And once again, we've given back a lot of the gains today. Netflix rolling over. MACD's weak. That could be setting up short. Breaking up trend. Now, we had this Netflix that didn't pay short back in here. It is above 50, 200. It's probably best to, especially if the SPX doesn't break trend, it's probably not the best idea to be short in stocks on an uptrend. So we're going to shy away from that unless the market goes on a downtrend. Booking, horrible. Expedia, horrible. Tesla, horrible. Or just horribly sloppy. It's Roku continues to grind higher every day. Very difficult trade up here. Risk rewards, very difficult. Bull flag, our number one trade setup. Whether the risk reward's worth it or not, it's a phenomenal looking chart. It looks like it wants new highs. So, obviously if you take it, you got to use this candle's low. So you're talking about 55 and you're buying at 68 and you're risking 20%. That's just a mammoth risk. But and you could do a fib. I guess you could probably risk 60. But it's still 12, 13%. That's a pretty size drawdown if you take it. Okay, NVIDIA, nothing. Intel, I do like Intel. And I do think if the market shows price strength confirmation, Intel could lead. Texas Instruments, no. AMD, Micron, Avgo, no. OLED, a leader that's paying. Bull flag, number one price pattern. And we're getting paid on OLED. Looks very good. Congrats. Light, I don't see too much going on there. Microchip, nothing. That one engaged and never did pay. It's one of those. I think we had 3 losers on the year and maybe 5 or 6 that we haven't been paid on. Maybe 4 or 5 that we haven't been paid on. Microchips didn't get stopped, but haven't got paid. So just let it be if you took it. Microsoft looks good. We talked about this before. I like Cisco, Microsoft, and Intel, all these old stocks. So those look very good. What about Oracle? Oracle looks okay. Momentum's slowing down, but I still like Oracle. It might pull back before it goes higher. Adobe looks good. Momentum is flat. It's hard to take these names. Coop, new highs. Momentum is flat. Oh, that was now. Sorry. I can't type. Coop, look at the MACD. I mean, you wonder why sideways action on a huge leading stock like this. Now, I do think this goes to 100, maybe even 105 without MACD. What's going to happen if we get up there, you have a bearish divergence and you're probably going to pull back. But my personal opinion is I think that one still goes higher, even without the MACD. CRM looks great. MACD not there. So Workday hit new highs without MACD, and that's selling off jobs. Not doing too much. FF5E, Splunk. Come on. Hit new highs without MACD. So we're starting to see a very similar theme. New highs without MACD. That's bearish divergence. We're seeing bearish divergence in a lot of things. You're seeing MACD bear cross in a lot of things. Lack of leadership. Maybe we've pointed out 5 stocks that look good so far. We'll scroll through, see if we find any more. But it's scarce. Bob I still like. Looks good. Palo Alto. I actually am going to remove this off the ESFL because it came and filled this gap. It has other plans. Did not engage, which was good. You're going to find this probably 10% or less of the time where you see a breakout and it doesn't show price strength confirmation, doesn't break the 61.8, and then just pukes right into that gap, which is no harm, no foul because we didn't get long. But that, a bull flag, the start, that's this pull, the start of the bull flag is the beginning of our best pattern to trade. But you wouldn't have gotten in trouble with that one, but that one didn't engage either. So VMW, there we go. New highs, MACD heading lower. eBay, it's the same thing with almost everything. So it's a really tough call going into the week before OPEX. Google looks okay. Twitter, Snap, we talked about, can't type today. Snap. Talked about Snap get at $10. It did. Now where it does from here, yeah, not too sure. Let's look at some more stocks that are sleeping. JP Morgan Goldman Sachs. I mean, these stocks are going nowhere. It's almost like they're not even trading. It's almost like the market's been shut down because oil stocks and banks are just not moving at all. Visa looks good. MasterCard looks good. BlackRock hitting that 200 SMA. What about casinos? No, they're all pausing at resistance. So what have we really found? I think CRM looked decent. Amazon looked decent. We liked Intel, Cisco, and Microsoft. So it's what, 6 stocks there. Banks look, they just, the XLF was interesting, but you look at all the banks and they're so boring. They're not doing anything. We flipped to energy. I could already tell you, it's just very sloppy, sideways, zero momentum. And that's not when we make our money. Now, I would say CVX looks decent, but you got to look at the MACD again. MACD's, it's starting to curl up. So if oil does lead us again, let's look for CVX. Schlumberger hasn't done anything. He hasn't really stopped on the last entry, but hasn't really paid. Marathon, not so much. Oxy. I would look for CVX. If that sector's going to do anything, look for CVX. Amgen, nothing. Let's head over to the biotechs because there's that IBB again. Let's see if we see any leaders. I have to type correctly to see a leader, though. All over the map today. Alexion, I like a lot. A lot. I think I said that about Cisco and Cree last week, and they paid. Alexion, I like a lot. Looks very good. It's a bullish pattern. Vertex looks good. ISRG, I like a lot. A lot. Aluminum, I like a lot. So there's 4 stocks in that sector I like a lot. REGN, I like a lot. That's 5. X-ray, that one looks good. I would say I like this one a lot too, but you just filled this gap. And that's going to be a hard new one after filling a gap. CMG, starting to see price strength confirmation coming. No MACD, so it's going to be a grind. Twillo, I like a lot. Do we look at SQ? What about Team? Team, I like a lot. So out of the blue, I just named about 5, 6, 7 stocks that I do like a lot. And so we still have some leadership here. Someone mentioned Monster the other day. That's a shooting star pattern. You gap up, close near the lows. So, yeah, you could use the 61.8, and you're fine with that one. I don't really like when they close them down there near the lows. I don't mind it up here. So this is going to be tricky. But we talked about some stocks that I like a lot, right? REGN, Aluminum, ISRG, Vertex, Alexion, Jazz. I don't know, was Jazz one of them? I can't remember. Yeah, I do like Jazz a lot. So there's 5 names. Microsoft, Cisco, Amazon look decent. And what was it? CRM and Adobe and a few others. So the biotechs look good. Now, look at the Qs. Can the biotechs bring these Qs back to life? Because MACD has now been heading sideways to down for a month. As price went up for that month, MACD didn't go up. It grinded down. So you have some bearish divergence here in the Qs. So it's imperative that we see price strength confirmation soon, but we have lack of leadership. All we have is the IBB, which let us out last time. Can it do it again and kind of buck this trend of hitting pivotal lows this coming week? I don't have the answers. The only answer I do know is ROE works, staying long in uptrends works versus your stops, trading like a robot works. That's all I have for you. Charts while you sleep, week 9 market video update for the weekend. Have a great weekend.